Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
A fanatic is one who can't change his mind and won't change the subject. Never miss a good chance to shut up. Will Rogers. The easiest way to find something lost around the house is to buy a replacement. Everybody has a plan until the market opens. In bull markets, everyone is a genius. In bear markets, everyone is an economist.
For 2 decades, corporate America was busy buying back shares. Now it's preparing to sell them. According to JPMorgan, net US equity issuance could jump to $200 billion in 2026 and then explode to $1.2 trillion in 2027. The biggest 2-year surge in stock supply since the late 1990s. The reason is simple. AI is not cheap. Between giant IPOs from companies like SpaceX, OpenAI and Anthropic, plus fresh share sales from tech giants funding massive AI investments, Wall Street is about to receive a flood of new stock. Investors love the AI story, but they will soon face a new challenge, absorbing a mountain of equity supply. The $1 trillion club used to be reserved for public market royalty. Now a private company is barging into the velvet rope. With an estimated valuation of nearly $3 trillion, SpaceX is now worth more than Tesla, Meta, Berkshire Hathaway and Eli Lilly, and is closing in on Microsoft and Amazon. What's remarkable is that SpaceX isn't just a rocket company anymore. It's becoming a bet on satellites, defense, communications, space infrastructure, and increasingly artificial intelligence. Investors are effectively pricing in an entire ecosystem rather than a single business. Not bad for a company that literally burns money to leave the planet. India's National Stock Exchange is no longer just a domestic success story. At current private market valuations, NSE would rank among the world's 5 most valuable exchanges, sitting alongside global giants such as CME, ICE, and the London Stock Exchange. What's remarkable is that this rise has been powered by India's booming retail participation, derivatives trading, and growing equity culture. An exchange that started as a market reform project in the 1990s is now being valued higher than the Nasdaq, Deutsche Börse, and Singapore Exchange. It turns out that when 1.4 billion people start investing, the exchange running the scoreboard becomes a very valuable business. India's internet is getting a lot more filtered. Government website blocking orders have surged from just 471 in 2014 to nearly 10,000 in 2024, reflecting a dramatic rise in digital content restrictions over the last decade. Interestingly, the focus isn't on apps, it's websites. While app bans grab headlines, the vast majority of enforcement happens quietly through the website and URL blocks. Social media platforms have borne much of the burden, with Facebook and X accounting for a large share of takedown requests over the last few years. Supporters argue it's necessary for security, public order, and misinformation control. Critics see it as a growing challenge for digital freedoms. When it comes to deposits, size isn't the only thing that matters, geography does too. This chart shows how much of each bank's deposits comes from its top 3 states. At one end, SBI derives just 29% of deposits from its largest 3 states, highlighting a highly diversified franchise. At the other end, Federal Bank gets 71%, while Karnataka Bank and Kotak stand at 70% and 62% respectively. A concentrated deposit base isn't necessarily bad. It can reflect strong regional dominance and customer loyalty. But it also means local economic slowdowns, competitive pressures, or regulatory changes can have a bigger impact. In banking, diversification is a bit like insurance. You only notice its value when something goes wrong. India may be urbanizing, but not everyone is moving at the same speed. By 2026, the country's urban population is projected to reach 36%, yet the gap between states is striking. Kerala, Tamil Nadu, Mizoram, Sikkim and Gujarat are already approaching or exceeding 50% urbanization, while states like Bihar, Himachal and Odisha remain far below the national average. This isn't just a demographic story, it's an economic one. Urbanization typically brings higher incomes, greater consumption, stronger housing demand and more infrastructure spending. In many ways, tomorrow's growth map will look a lot like today's urbanization map. The real surprise is that India isn't urbanizing as one country, it's urbanizing as several economies moving at different speeds.